As we all know, DeFi has maintained a continuous growth trend since its inception, attracting countless investors. Still, unfortunately, when time enters 2022, the beginning of the bear market in the crypto market has slowed down the growth rate of DeFi. DeFi projects and protocols based on major public chains occupy many tracks, especially some products in the traditional financial industry. Corresponding substitutes can also be found in the DeFi market. Therefore, DeFi is also considered a decentralized version of the conventional financial sector. Recently, the emergence of the DeBond Protocol, a decentralized DeBond protocol based on the bond ecology ERC 3475 standard, has attracted people's attention. It is a decentralized bond ecology platform. In this video, let us see how DeBond excels, in particular, whether it can push DeFi out of its trough and trigger the arrival of new trends. What is a decentralized bond? Bonds are a popular financial tool in the traditional financial field. They allow investors to provide loans to borrowers and earn interest on their investments. It is a low-risk investment method. Bonds, currencies, bills, and stocks constitute modern society's essential financial tools. Contracts, futures, and options are derived, forming a complex financial market. With the continuous advancement of blockchain technology, the cryptocurrency industry is also rapidly developing and expanding, and with it comes the rise of the decentralized finance DeFi field. Currently, bank savings, loans, funds, insurance, and other product pages in the traditional financial field can find corresponding decentralized applications in DeFi, but only decentralized bonds are missing. This is because of the lack of decentralized bonds A standard and protocol that suits it. Bonds have diverse and non-standardized requirements for collateral, issuance scale, redemption period, interest rate, repayment method, and repayment time compared with other products. Moreover, bondholders usually need to speculate and earn the difference, which will have higher requirements on the liquidity of bonds and make people's requirements for DeFi more stringent, mainly when the collapse of Terra is triggered. After the DeFi liquidity crisis outbreak, the market's expectations for decentralized bond products with standardized protocols increased further. A decentralized bond is a debt security that functions like a periodic receipt. The borrower receives the money and promises to return it on a specific date, and a smart contract will control the fulfillment of the obligation. Generally, for individual investors, decentralized bonds are a way to diversify portfolios and control risk. Furthermore, decentralized bonds are regulated in the same way as other cryptocurrencies. If you are in a country or region that allows legal buying and selling of cryptocurrencies, you can safely use decentralized bonds. Decentralized bonds are an integral part of the DeFi market, and they may be included in the regulatory system in the future, which can ensure the legality and compliance of decentralized bonds and allow this product to enter a more benign development in the environment. What is DeBond? DeBond is a decentralized bond protocol. DeBond Protocol, developed based on the ERC 3475 standard. It is also a decentralized bond that supports creating and managing multiple redeemable bonds and provides bond and bond derivatives trading, ERC 3475 wallets, and a bond ecological platform. The DeBond platform offers a visual tool for creating bonds and bond derivatives. It allows any institution and individual to design their bond products for financing through a graphical programming interface with a shallow technical threshold. ERC 3475 is the Ethereum Innovative Contract Interface standard proposed by the DeBond team specifically for bond products. The middle pioneered the introduction of decentralized bonds to the blockchain for issuing and managing multiple callable bonds. As the first decentralized bond product agreement and ecological platform, DeBond can support the issuance, redemption, trading, and derivatives trading of various types of bonds, such as fixed rate, LP, NFT, and hybrid bonds. To fill the gap of decentralized bond products in the current DeFi market, DeBond has completed the seed round and private A round of financing, opened the B round of funding, and received support from well-known crypto institutions, including BitChain Ventures, Spark Digital Capital, Calling Star Capital, and XNet Capital. DeBond's new financing round will be used to expand its economic ecology in the DeFi market. What is ERC 3475? How does it work? To solve the problem of decentralized bonds in the market, DeBond submitted the proposal EIP 3475, multiple callable bonds, to Ethereum in April 2021 and was merged merged into the ETH master. So there is the ERC 3475 standard that we are now seeing specifically for the bond ecology. ERC 3475 is a new standard smart contract interface created by DeBond with multiple callable bond standards. Its appearance makes it possible to manage various callable bonds. Using ERC 3475, you can store more information about bonds like the traditional financial industry, launch more different types of bonds, and add many new functions to make them more diverse. The ERC 3475 standard has a more complex data structure, and each bond can obtain independent algorithm rules without deploying additional smart contracts. Based on this standard, not only standard bonds in the traditional sense, but also financial derivatives such as futures and options can be created, which would be crucial for bond products in the decentralized financial market. Compared to ERC 3475, ERC20s are limited in requiring a separate token contract for each new type of token. With ERC 3475, it is now possible to issue bonds with multiple redemption data. This real breakthrough will create a better infrastructure for the decentralized bond market. What are the advantages of ERC 3475 over ERC20? The current ERC20 standard does not have much consensus on the data structure. To build more complex reward and redemption logic, a new standard requires the ability to manage multiple bonds, store more data, and be gas efficient. The ERC 3475 standard interface allows any token on a stable and compatible blockchain to create its bonds. These bonds and derivatives with the same interface standard can be traded in the secondary market. Any third-party wallet app or exchange can read the balance and exchange conditions. ERC 3475 bonds and derivatives can also be packaged and traded on the secondary market. Compared to ERC20, ERC 347 has a more complex data structure, allowing LP tokens to store more information and enabling developers to build more complex logic for the redemption and reward systems of related DeFi projects. Existing standards cannot fulfill the need to issue bonds with multiple redemption data. For example, ERC20 requires deploying a separate token contract for each type. At the same time, ERC 3475 allows any number of bonds to be created in a single contract type. The ERC 3475 multiple callable bonds standard allows each bond class ID to represent a new configurable token type and allows each bond nonce to describe the issue date or any other form of data in Unit 256. In addition, each random number for a bond class may have its metadata and other redemption conditions. The ERC 3475 multiple callable bond standard will allow users to save on gas expenses. In addition, users will increase the token's market cap when trading and burning ERC 3475 bonds. Currently, exchanges or lending platforms can be updated to recognize ERC 3475 compliant bonds or derivatives. In addition, ERC 3475 can not only generate bonds with homogenized tokens as collateral, but also generate bonds using NFTs as collateral. Unlike typical ERC20 or ERC 721 tokens, ERC 3475 bonds are semi-fungible and multi-dimensional. Bond random numbers of any class are not interchangeable with another random number or class. It has an array of a recognized unit 256S, where we can store information such as redemption time, interest rate, redemption conditions, etc. Coinverse's thoughts on decentralized bonds. In Coinverse's view, the launch of the DeBond Protocol is a solution due to the inability of ERC20 to meet certain conditions for decentralized bonds. Furthermore, as an upgraded version of the DeFi income system, DeBond Protocol can provide extended functions for creating decentralized financial bonds and numerous derivatives. What is exciting is that the emergence of DeBond fills the gap in the DeFi field, can bring more changes and possibilities to DeFi, and can also receive a large number of loyal users, all of which may bring the current low point. DeFi pushes to the next new stage. In particular, when a more complex ERC 3475 decentralized bond standard is adopted, it will have the potential to produce results beyond our imagination. The emergence of ERC 3475 will significantly improve the efficiency of DeFi and have all the potential required to formulate smart contracts of computational complexity. DeBond was initially designed to be an open, decentralized bond platform and developed as a decentralized community. We believe that the best solution for decentralized bond products in the DeFi space will be found as its ecosystem grows. Coinverse is the world's first value discovery community in the blockchain field. We reviews and judges public chains and high-quality projects objectively and fairly. All content of Coinverse is for reference only to community users, not as investment advice.